These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will enter transactions for the payment of bills into our Excel bookkeeping problem, keeping in mind how this same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to first look at how this could be entered into QuickBooks and accounting software, and then jump over to Excel and put this same information into our Excel worksheet. When considering QuickBooks, we're looking at the vendors section here, and what we're saying is we're paying off the bill, meaning we're paying something on account. If it were a book problem and we were to be doing a journal entry for a book problem, it would be saying something like we paid cash on account, meaning we're paying off a bill that was recorded in the past. If we see that in terms of QuickBooks flowchart, it means that in essence we entered a bill here and now we're paying off the bill. So it's already in the accounts receivable and we owe this individual's money. And then in QuickBooks we can just check off this pay bills item and then select which bills we want to pay. Meaning if we select this item, it's going to give us a list of bills that we have entered over here which have not yet been paid, typically entered over here, which have not yet been paid. So if we scroll down, then we only have one at this point in time. We're going to say this one bill that we have out is for $15,000. We have not yet paid it. We're going to pay it at this point in time. And QuickBooks gives us a nice quick way to check this off. In essence, all we're doing here is writing a check. So when we do this, when we check this off and we go down here, we look at the method. It says we want to write a check. We can either print the check or assign the check number. In essence, we're writing a check in the accounting software using this process. The nice thing about this process is that it can write multiple checks. So if we had multiple bills, we could just check them all off, and then QuickBooks would just write the checks and do it all automatically, which would be nice and fast and great. So what we're doing then, when we see this screen, is we're paying off a bill, paying off accounts payable with a check. We're making a payment on account, and therefore we're going to reduce the cash account and record the reduction to the accounts payable account. No effect on something like expenses from this transaction. And once we select pay selected bills, QuickBooks will in essence generate the checks for these and write those checks and apply them out. The reason QuickBooks can apply them out, and it's a little bit more complicated than just reducing the accounts payable and writing the other side to the decrease in cash, is that QuickBooks also has to track individual vendors and go to this vendor, in this case the Epiphone vendor, and say that I'm going to also have a subsidiary account and show how much is owed to that particular vendor. And by us giving QuickBooks the vendor, it can automatically reduce the amount owed to the vendor as well. When we put this information into our system, we're going to have to do the normal journal entry for closing out an account or payment on account, reducing accounts payable, reducing cash, but also needing to track the accounts payable by vendor, showing that we owe, in this case, Epiphone, part of our accounts payable, that $15,000. We need to reduce their balance as well. We'll see what that takes now in Excel. Here we are in Excel. We are, in essence, remember, the journal entry we're doing here, if we saw this in a book problem, would be that we're paying off making a payment on account, meaning is cash affected? We're going to say, yeah, the checking account's affected. We're going to write a check. And therefore we're going to decrease the checking account. This has a debit balance. To decrease it, we'll do the opposite thing to it, which is a credit. So we're going to copy this here, scrolling down to the next area we have. The date's going to be the same, 1/28. And we're going to put this on the bottom. So we're in Q27. Right click and paste 1, 2, 3. The amount's going to be for $15,000, so we're in S27, credit $15,000. Then we're going to debit something for that same amount. We are in S26, negative of this number. We could just type in a positive 15,000, but that's kind of our plug formula. The more we can use the formulas, the better. This is going to be the account we need now. All we need to know is that other account. Now, the question here, oftentimes when we think about this, we start thinking, well, why did I pay the 15,000? Is it some type of expense that we've got, or possibly inventory that we purchased? And it is in essence, but we did that in the past. And now, of course, if we're paying it off on account, it means that we owe someone money for a transaction happened in the past. That then is a liability of accounts payable. So accounts payable represents a liability, which means something happened in the past. In this case, we purchased inventory, guitars, that we then plan on selling in the past and incurred the liability. Now then we are paying it off. We already know that we're going to debit this account because we credited cash. That's the beauty of thinking of cash first, even if it's going to be on the bottom, even if it's the credit portion of the journal entry. But we want to think through it now. We see accounts payable here representing people owing us money. They then paid us that money, and therefore this account needs to go down. How do we make something go down? We do the opposite thing to it than its normal balance. This is a credit. The opposite is a debit. We will debit this account to make it go down to 0. So we're going to copy the accounts payable, scroll down. We're going to put that in cell Q26, right click and paste 1, 2, 3. Just for formatting, we'll put our cursor on the checking account, go to the Home tab, go to the Alignments group, and increase the indentation. There's our journal entry that we have journalized into this blue area, the General Journal, which we will now post, the process of posting to the General Ledger, which will then be used to create the trial balance and then financial statements. So we're going to first post this accounts payable. It's going to be our first orange account, our first liability. It's going to be in the same order, assets and then liabilities, on the trial balance as in the general ledger. Let's freeze the panes to make this a bit easier. We're going to be up here in AJ1. We're going to go up top to the View tab. We're going to go to the Windows group, freeze panes, and freeze the panes. Then we're going to scroll over looking for that first orange account. We're scrolling over looking for the first orange account. There it is. There's the first orange account. And we're going to scroll down and we're going to debit that in AY16. So we are in AY16 equals, pointing to that 15,000, brings this credit balance down to 0. Scrolling back to the trial balance, we should see that same 0 on the trial balance. So there it is, back to 0. Then we're going to record the other side, it to the checking account. There's the credit to the checking account. Here's the checking account, has a debit balance in it, and it's the first account. So it's the first account on the general ledger. We're going to scroll down. We are in the credit side in AN23. Within AN23, we'll select equals, point to that 15,000. This debit balance then is going to go down to 98,606, that then something found also on the trial balance. So there's that. Now, note that we decreased the accounts payable account to 0, and we also need to track that not just by when things happened, as is done in the general ledger, but also by who we owe the money to. So the fact that we decreased this to Epiphone, our vendor Epiphone, means that we need to track it in a subsidiary ledger similar to the subsidiary ledger we have been using for accounts receivable. So we're going to go all the way to the right and see that subsidiary ledger listing this amount out, which is currently 0, but we need to make it 0, by vendor or people we owe, people we buy from. So we're scrolling all the way to the right. We're scrolling all the way to the right. We're going to see more orange accounts next to the accounts receivable subsidiary ledger at some point, hopefully, and that's going to be way over here in columns starting with CZ. So here it is, Epiphone. Here's the accounts payable subsidiary ledger. And if we scroll down, in essence, we're just going to record this again to another kind of trial balance, another kind of general ledger, I should say. But it is a subsidiary ledger instead of being broken out by date, now broken out by first vendor, who we owe, and then date. So here we just owe Epiphone, but we owe them 15,000. We paid it off now, which is nice. We're going to say equals and scroll down, and we want that debit. And that'll bring the balance down to 0. And now if we add up all the vendors, of course, we owe nothing. And that nothing is now on the trial balance as well. So let's scroll back to the trial balance in the balance sheet to see the nothing, which is actually a good nothing this time. The nothing is good. So scrolling back, and we see the good nothing there, the good zero, meaning we don't owe any money on the payables, and the good nothing there, the zero, meaning we don't owe any money on the payable there as well. We'll see the effect on the financial statements by first we'll remove the freezing of the panes, go into the View tab, the Windows group, and freeze panes, and we will unfreeze the panes. And then let's take a look at the financial statements which have been adjusted and see what happens to them. I'm going to go ahead and point to them by going to the checking account and then point that to the financials, and then the accounts payable and to the financials, and let's see what happens to them. We're going to scroll to the right, and the financials will be updated automatically as we enter this data into our system. Scrolling over, we see that cash has been updated and the total assets equal liabilities plus equity, so that looks good. Accounts payable is now down to 0. It's been all done automatically as can be done in automated systems such as QuickBooks. No effect on the income statement from this transaction. We already paid for, it looks like, the inventory in the past, and now we're just paying it off. So we have that same loss in this case of the $755 that was there before this transaction, that be included on the statement of equity, that resulting in part in the ending balance in owner's equity of $149,642. That amount then found, of course, on the balance sheet here under equity $149,642. Hello, in this presentation we will be working with the Pay Bill function within QuickBooks Pro 2018. If you have been following along with us, we will be continuing on with the Get Great Guitars problem. If not, that's okay. We will be working here with the Pay Bills. If you have the backup file for this location in the problem, you can restore that by going to the File tab, Open and Restore. Note we are entering new data, therefore it's good to be on the same point, make sure we're on the same page. We can do that by restoring a data file as close as possible to the current section we are in. But if you've been following along, we'll be there as well. If not, you just want to see what this icon is, this Pay Bills, that's what we'll take a look at too. We are entering data, putting in new data here, so we'd like to end up, at the same point at the end of this process. So putting a new data set at each point can really help us within that process. So in this one, we're going to be working on the Pay Bills. Now, when we see this icon here, it says Pay Bills, we are going to assume that we are going to pay bills typically with a check. So what the process here tends to be within the Home tab, in the Vendors tab, and if you're not in the Home tab here, to get to that, you're going to go to Company, Home tab. I also like having the open windows open over here, where you would go to the View, and then Open Windows to see those open windows as well. Then we're going to go over here, we're taking a look at this Pay Bill. And so when we think about pay bills, we're thinking about paying bills with a check. So typically the process within the vendor function, this being the payable function, gives us a nice flow chart within the Home tab, is usually that we are going to enter a bill, and then we're going to go through the pay bills. This is a useful function when writing checks for a few different reasons. One is that it allows us to enter all the checks at one point in time. Two, it allows us to enter the checks or enter the bills at one point in time, and then enter the bills at the point in time they are received, even if that's not the same point as payment, that typically being better format for the accrual basis method. So we want to enter the bill when we receive them, even if we're not going to typically be putting in the check at that point in time. It also allows us to choose which checks we want to pay as they become due, even though the bills have already been entered into the system. That could be a useful item when we're managing which checks we want to write. Note, however, there are different ways that we can write the checks depending on what type of system we are working with within QuickBooks, what type of system we have set up in order to enter our data into QuickBooks. Another system we looked at last time is to write checks. Just use this write check icon, and that will open up a check like so. And we can write checks. It looks just like this within this icon in this format. and that will of course decrease the checking account, and it'll record the other account to whatever other account was selected. I'm going to close this back out. Another way that we could enter checks would be going to the banking up top and then going down to use register, and then use the check register to enter the checks. This would be a way to enter checks typically if we're not printing those checks from the QuickBooks system. If we are printing checks from the QuickBooks system, this method is a pretty good way to do that, because it can then allow us to list all the checks that need printing, allow us then to choose the amount of checks we need to print in order to put them into the printer, because we are going to have to use external checks if that's our process, and then print those checks. So in this case, we only have our one vendor that we entered data into that we owe money on from an earlier transaction, that being the start of the company. We opened a new company, we put a beginning balance into a particular vendor, now we're going to pay off that beginning balance. So we're going to go to the pay bills icon here, and we see that we have our one vendor Epiphone that we owe the 15,000. That being from when we set up the beginning balances within our new company, we still had this Epiphone that we owed. We put that into the beginning balance, and now we can show that we're going to pay that off. If there's one item or multiple items, what we're going to do is check off that item to indicate that that's the item that we want to be paid. Also note that there's going to be a couple options we could look through here. If we say that show bills, we typically show all, or I would typically look at all. But if we have a lot of bills in here and we want to limit the amount of bills we're looking through, we might just want to limit it to the due on or before a specific time period, that giving us a better idea, a better quick view of what we want to look at. We can also use some other filtering options and sorting options. Again, if we had a lot of bills in there, those could be useful for us to decide which ones we're looking to pay at this point in time. If we tab through this, we're going to check off that this is going to be the item we will be paying. This is going to be the due date in accordance with what was set up. In this case, the beginning balance was set up in this format. We have the vendor, we have the amount due, and then we're going to have the amount to pay, which will be the same in this point at this time. We have some other options down here. The clear selection, of course, would clear everything that has been selected in terms of this one check that we have at this time. We have the go-to bill, the set discount, and the set credits. We're not going to be dealing with any of those options within this setup. We have the payment date. That's typically going to be the current date that we're, of course, writing the checks at. We, however, here are writing the checks as of a future date. That date will remain, in this case, January 28th, 2021. That date being from the prior transaction we did within this problem. That's one of the defaults we chose for this particular problem. Another default oftentimes is just the current date, which I believe is the default option. We chose, in this case, to keep the prior date as one of the defaults because we're working in the future in a problem such as this. We then have the method. In this case, we're going to have a check versus a credit card. Then if you were to print these checks, you'd want to keep print checks here. You'd have to order the checks outside of QuickBooks. So you'd have the pre-ordered checks that we'd have outside that would have our check numbers on it and our bank account information. We'd have to then put those checks into the printer in the proper format. And then once we record this, it will generate those checks and print those checks from those pre-printed format. You got to have the pre-printed checks. One reason is just another check figure on our internal controls. Having those check numbers on the pre-printed checks gives us a really good internal control. In our case, we're just going to assign the check number. We're not going to go in and actually print the checks. So we're going to choose assign check number. Now, as you do that, you want to make sure you have the right check number. You would think the system would just kind of pick the next check in order when we say pay bills, but it makes us manually put in that check number. So we want to make sure we have the checking account selected, this being our major checking account typically. And then once we select the pay selected bills, if we assigned a check number, then it's going to ask us what that check number should be. So if I select this right now, for example, it says, let me assign the check number here. Let QuickBooks assign the check number. So if we select the default here, it'll most likely go to the next check. If I select this option, then we can manually put in the check number. If there's multiple checks, then it'll start from that check number and continue on with those checks. So if you don't know what that check number is and you want to double check it, you got to close this. We could go to the check register and see what check number we are on, just to make sure it ties out to our checkbook. If we want to, we have to close this out so that we can open the register. So I'm going to have to enter this data back in, which is just basically checking that box. So we're going to close this out. And I'm going to say, we're not going to save it at this point. We're just going to re-enter the data. Then go to banking. Then go to use register. We got the checking account. We're going to select the checking account. And the only thing we're looking for, we're saying there's the last check. So that means we are on check 1010. That's going to be the check number we want to make sure is assigned next. So we're going to go ahead and say close this. We're going to go back into pay bills. We can then check this back off. Everything is as it should be. We're going to change the to print to assign check numbers. It's going to the checking account as it should. So we're going to say pay selected bills. Pay selected bills. And then we're going to assign the check number, which will be 1010. What we just saw was the next check number in our series. The check date is correct. The payee is correct. So we're going to say okay. When we record this, it should write a check that should appear in our check register, should decrease the checking account balance. It should also decrease the amount owed to this particular vendor, Epiphone, so that would decrease the accounts payable. So let's do that and see if that's what happens. We're going to say OK, and it's going to record that. And we're going to say payment summary. Here's going to be the payment summary. We're going to say done on that, and then let's take a look at this in a few different formats. One, let's take a look at the check register and see if it recorded that within our check register as we would assume it would. So we're going to go to the banking, go to use register, and we see the check register here. That's the one we want, checking account. We're going to say OK. And then we see that next check has been generated. So it's in accordance with our sequence. We see the bill payment as the icon here. It was a check that was created just like these. However, this was in response to a bill payment telling us that we're tying those things out. We're tying out the bill and the check, whereas this one was more of a standalone check, which had not been entered as a bill before then entering the check. Then we can check the reports and see if this has been decreased on the balance sheet in terms of cash and has affected the accounts payable going down. So we're going to go up to reports up top and take a look at that. We'll go to the company and financial. We're going to go scrolling down to the balance sheet. We will choose the custom report so that we can change the date range so that when we drill down on the dates, we can then get a date range. So it's going to be 01/01/17 to 12/31 01/01/21. We're working in the future to 12/31/21. This is the year we will be working in at all times. We're going to say OK. Then we're going to see if it has affected the checking account as we would assume it to. So we're going to double click on the checking account. And there's the 15 right there. So we're going to double click on that. And notice it goes to our check icon here. So it doesn't go to that same screen that we had when we had the pay bill screen. When we paid the bill, a check was generated based on the information from that screen. So even though we use that screen, the driving form that QuickBooks is using is the check. So we'll close this back out and take a look at the other side. I'm going to close this back out, go back to the balance sheet. So we have the balance sheet back open over here. The other side would be the liability of accounts payable. So if we scroll down to the liability, we should have paid off the liabilities. Note here that we don't have the accounts payable here. What does that mean? It means we have paid off all the liabilities. We don't have anything. Accounts payable is a 0. Now, if we want to see that within accounts payable, that it goes down, a couple places we can go. First, let's try to look at the list of accounts. So we go to lists, chart of accounts up top. This will give us all accounts, whether they are open or closed, whether they have zero balances or not. And then if we take a look at the other current liabilities, such as payroll payable, we've got loans payable, we're looking for accounts payable. Sorry, it's not other current liabilities, the liability of accounts payable, account type. If we double click on that, even though it has zero, we should get a register, and there's the register. So the only activity we have in the payable is this 15 that was owed, now paid, now back down to zero. If we close this out and close this out, we should also see this on the vendor detail, or the accounts payable detail. Let's take a look at that. We'll go to reports up top. We're going to go to vendors and payables, and we're going to see the vendor balance detail. Vendor balance detail. Change the date range. Well, we don't really need to change it. It's going to show all the activity that we've gotten so far. There's what was owed due to the beginning balance we put into this particular vendor. Here's the payment that we made. Double clicking on that, we see that check once again. If we close this back out, going to go back to the home page. So that once again is the pay bill item. Pay bill typically being used after the bills have been entered. Pay bill is a format of generating a check, typically a check that we will write either through the system within QuickBooks or assigning a check in order to record the decrease in our checking account so we can enter this data within the system, hopefully reconcile then the bank account using that data and create the financial statements with it.